On to the business news. Brian is here. He's starting with a pair of landmark court verdicts. Of course, we brought you one of them yesterday morning, didn't we? And another one followed later in the day against US social media giants and what that could mean for the future of the industry, Brian.
So, Stuart, those legal decisions in New Mexico and Los Angeles could indeed, in fact, signal a sea change for social networks. The financial damages themselves do not represent a serious threat to either Meta or Google. A $375 million jury verdict in New Mexico over child endangerment represents more or less what Meta earns in a day. The $6 million total against Meta and YouTube in Los Angeles, essentially a rounding error on their balance sheets. But they do represent a crucial crack in the legal armor that has protected social media firms for decades, which is the idea that they bear no responsibility for the content that users post on their platforms. The latest decisions instead targeted the design of the platforms themselves, the addictive nature of their recommendation algorithms and user interfaces. Both of those verdicts are set to be appealed, but analysts say the eventual fallout could resemble that of the 1998 legal verdict against America's top 4 big tobacco firms that saw them eventually pay out $206 billion and severely diminish the industry.
Oh, I think it sets a precedent, very much so. I mean, people always ask, well, how can we pass laws that keep up with technology? I think this incentivizes legislators to be on the side of the people and go ahead and figure out other ways to regulate tech companies, ensure that they don't do further harm to children or, quite frankly, society itself.
It's time, Brian. How are they holding up so far today?
Volatility, Stuart, still the order of the day on the oil markets. Crude once again on the rise after Iran rejected direct talks with the U.S. aimed at ending the now 4-week-long war. International benchmark Brent crude back above $105 a barrel amid reports from Bloomberg that the Trump administration is gaming out scenarios for oil hitting at $200 a barrel. U.S. contracted WTI headed back up towards $93 a barrel. Asian indexes mostly losing ground. The region's economies are particularly reliant on imported oil from the Middle East. The Nikkei in Tokyo faring a bit better than its peers as Japan has begun releasing oil from its strategic reserves on Thursday. Analysts, though, say that's a temporary solution at best. The Kospian sold down well over 3%. European markets have opened lower as well, with investors keeping a close eye on the meeting of G7 foreign ministers taking place outside Paris today. French Finance Minister Roland Lescure has called for a meeting of G7 finance and energy ministers, as well as central bankers on Monday to address the fallout from the war. He spoke to French radio RTL earlier today about the threat of rising inflation in France. Let's take a listen here.
We are facing an external shock that is going to cost us collectively. The question is, how can we share these costs? But we're going to face this together. If the shock is short-lived, by the end of the year, prices will have had time to come down. We are well aware that short-term inflation will be rising.
And finally, for business, Elon Musk. He's hoping yet another of his companies will head to the moon, literally, if I can say it, literally and figuratively as well.
So SpaceX, Stuart, reportedly preparing to go public. Tech news site The Information reporting that the rocket company founded by Elon Musk is eyeing a $1.75 trillion valuation as it gets set to begin selling shares in the coming months. Simon Moritz has the details.
Ignition and liftoff. Go.
Reaching for the stars with a sky-high valuation, Elon Musk's SpaceX is suiting up to launch its IPO, a public share sale that would value the rocket company at an eye-watering $1.5 trillion. First reported by the tech site The Information, the sale is expected to float some 5% of the company's equity, aiming to raise around $75 billion, which would make it the largest IPO in history. Unlike many tech firms seeking investor funding on public markets, SpaceX already has significant cash flow, largely thanks to the lucrative government contracts it receives and its major profit generator, Starlink. The satellite internet provider is estimated to have generated $8 billion in 2025, accounting for 50 to 80% of SpaceX's total revenue. So why go public? The SpaceX acquisition of xAI in February saddled it with a cash-hungry subsidiary that is reportedly burning through $1 billion per month as it races to catch up with rivals like OpenAI and Anthropic, both of which are also planning to go public. IPO proceeds would also fund further development of the Starship rocket and more aspirational projects like AI data centers in space and Moonbase Alpha, a self-reliant lunar city. The move comes with potential downsides for the notoriously regulation-averse Musk, like requirements for public performance reports and having to answer to Wall Street analysts.
Busy guy, that Elon Musk.
Certainly is. Brian Cohen with Business on France 24. He's busy too.